How are you doing, guys? Just want to do a bit of an update because I've not really done one over the past couple of days. We'll start off, I'm just looking through VVIX at the moment. It's not giving too much away. So this VVIX here, this is the volatility index for the volatility index. So it can be a good indicator that the VIX is going to go up, which is another indicator that stocks are going to get volatile as well. So we can see I'm going to put some trend lines in here. You can see we've got this bit of a range at the moment, pretty much capped above this level, and we're not going under this level either. So we're kind of range bound. Now this is the 4-hourly chart. What we can see here is we potentially today, or at least early into this week, could be quite key. If I zoom in a bit more, you can see at the moment we're range bound here, so it's reasonable to suggest that this could end up just being another one of these quick pop up and then a rejection back down. So what we need to see, if you're looking for any serious drops in the market, you want this to be up over here. Now it's starting to go up at the moment, as you can probably see, and it's sort of showing that we get into a pretty critical area. You've got this build up here, which is pretty strong. Today is going to be a bit of a telltale story, where either we're going to come back down here again, suppress the VIX and see what happens, or potentially we can go up to the top. Ideally what I would like is, well, either a clean breakthrough or at least a move up to the top of this range and sort of hold this zone for a period. Preferably something like that would be more ideal, as a minimum at least. So VIX isn't giving too much away, but there's a bit of a signal to say that we could consider going up. But then if you go and look at move here, so this is the volatility index of bonds. This has been in this rising pattern for quite a while now. So it's interesting. This is quite a bit of a bullish flag, really. If this starts going up higher and higher and creeping up higher, then we could be on for something interesting here with bonds. We're just not seeing that difference in VIX, which is really unusual. The difference between volatility in stocks and move, they're usually pretty correlated. And what you find is whatever happens to move is the VIX follows after, and that doesn't seem to be happening this time around. That's not to say it's not going to happen. In fact, it's entirely possible that when it does happen, it's just going to be a much greater move, because volatility is going to have to go really quick to catch. Potentially we've got a double bottom forming here. We're certainly down at the lows. We closed just under the 20 for the first time, so but then we came back and we closed just above the 20, and now we're heading up. The markets aren't open yet at the moment, so there's no real indication as to where the day is going just yet on here. And again, really, we want to be getting at least above this level here, sort of the 30. And you can kind of see this range here where we're top just here, and we're rejecting quite a few times. If we can get above 30, particularly if we can get a close above 30, it makes it a bit more likely that we'll go up and touch 35. If we can get through 35, it starts to open the doors, because the VIX is being heavily shorted at the moment. Eventually we're going to blow through these shorts and it's just going to pop, and when it does pop, it could quickly shoot up. I mean, if you can see back in, if we go back, if I had to check on the daily, yeah, you can go back to March 2020 and you can see the effects with the VIX. So once it gets going, it really gets going, and ideally this is what we want. And considering the state of the economy, the huge amounts of margin debt, I saw a chart the other day. Margin debt is unreal, and when that unwinds, which is possible, it's going to happen due to this SLR. VIX could go up here. You know what I mean? And the problem is that it stays down, it stays suppressed. You can see here you had these spikes, quick spikes, and it were really suppressed for a period before, and then it just went almost out of nowhere. So there's no reason why we can't be seeing something similar again. But for now, like I say, it's all speculation really. A better idea would be to look at, say, some of the US stocks. On the daily, well, it's not giving too much away, unfortunately. Are we in a topping pattern? Are we in a, the trend remains for now, whether you like it or not. I think, see, there's a bit of a trend line here. We're holding, on the daily, you got your 50-day moving average down here. And this is actually quite a support line. You can see it was a top here. And it's held a few times actually within the day, intraday, at this level. So, possible we could go back down to this again. But markets are always going to have a bullish bias at the moment. Even just with retail piling in. And it's one of those things, it's always like a last minute, it's bullish until it's not, and then everybody flips bearish overnight. And then it's bearish until it's not, and everybody flips bullish again. So I'm confident that it's probably still going to get bought. As to where that goes, I don't know. I don't see there being enough momentum at the moment to go above 4,000. I do think that within the next couple of weeks we are going to sell off, but we kind of need that trigger more than anything, which I can go into in another update as to what I think that could be. But for now, we've got this kind of range. It's almost like a megaphone pattern. You can see where it peaked. So arguably, you could suggest that we might even do something like this. If you're super bullish, people are thinking, well, we could hold here and then right back up, which would put us 4,100-ish, roughly, maybe a bit higher. I know there's talks of 4,200. I don't think that's going to happen personally, because I don't think there's enough money to push it up there. But you never know. The Nasdaq, however, if we go and jump onto there, this is a bit more interesting here, because we've come down, we've gone just under the 100-day moving average, come back up and rejected the 50-day again, come back down. So this is kind of a critical area really. If we don't hold the 100 and we start creeping lower, that opens to 200. If we break through the 200, it's game over for the Nasdaq. However, if you are bullish, what you kind of want to see is maybe another day or two just sort of around this zone, and that could give you a bit of strength to start considering to move higher. But you're going to have quite a bit of resistance up here. I don't think intraday is showing anything interesting at all. Probably nothing too much. No, we've not gapped on the open or anything like that. Markets are just happy sat where they are for now. You're not going to get any movement at this time. Nothing significant anyway. Let's have a look. Bitcoin might be interesting to look at. Well, actually, this is looking quite interesting here. So you've got a peak, you've come back down, you've got sort of a lower double peak, it's failed, and it's actually come back down, tested the 100 period moving average, and at the moment, we've got a nice red candle here, rejecting the 50. So if that holds, potentially, Bitcoin's going to go, you've got a support level here. So, I don't know, we're going to see Bitcoin back down to 52 by the end of the day, possibly. I think the whole thing's a ticking time bomb. It's only a matter of time until it crashes and doesn't come back at all. As to when that's going to be, I'm not 100% sure, but every day goes by is a day closer, and that is definitely looking pretty ominous at the moment. That is certainly indicating that we're probably going to go head a bit lower. And if we start breaking under this level here, back down to, you're probably going to find a bit of support. I think it's reasonable to say that we could get a foot pull back down to 40,000, another bounce. If this comes in with a lower peak, then yeah, I'll be looking for things to start heading a lot lower for Bitcoin. Obviously the Bitcoin bulls aren't going to like that one, because Bitcoin never goes down, does it? It'll only ever go up, and you're the first people in history to never lose. But we don't like that, do we? We don't believe in that kind of stuff. We believe in common sense. So let's have a look at the dollar. What's the dollar telling us? Well, that's looking pretty good on the weekly. In fact, actually, I'll just go back, because this trend line is pretty important. I'll go back here. This trend line has held for a few years, sort of. It was the bottom here in 2008. Held, came back under, came back straight over, held here, came back under, straight over. It didn't really get quite down that far here, but sort of held here, came back under. So potentially, you know, this is quite an important zone to get under. I can even move this trend line actually, because if I go here like that, and then move that back, I think it held this as well. Yeah. So I mean that's going to be a bit higher. So we're looking. There's potentially going to be zones of resistance on the dollar. But you expect, obviously, there's going to be resistance zones anyway, isn't there, if it starts going up. But the key thing now is to start looking at this move and where we're going. So we know that funds are now covering positions and starting to go long. You can see this kind of range that we've been in. So it's reasonable to say that there's no reason why we can't just go up to the top of this range in the first instance, before we think about going anything higher. And it's been quite a consistent sort of pattern really. Up here, down, up, down, up, down, just under it, back up, just under it, you know. So I think this potentially this is what we're looking at, and this is certainly looking very bullish on the weekly here. That's a strong, even just, I mean, it's Sunday night and that's already at the highs of the week. It's not even started. The DXY index has only just opened and it's already almost as high as the peak from last week on Sunday night. So that's a pretty good indication so far. Let's have a look on the daily, see if that tells us a different story. No, that's looking really strong, which is great news for me because I'm obviously super dollar bullish. Yeah, here's your support zone we've had in for quite a while. It's come down, it's tested this beautifully with like a double test. So the key now is to get above this 200-day moving average. If we can break here, it really opens the window up, and then your next move is going to be, I don't know where that P keeps coming from. The next move is going to be somewhat to the top of this range here. If we can have a strong move up to the top of this range, great news for the dollar. I do expect we're probably going to find some resistance here. It'd be nice if we don't, we just blow straight through it, but it'd be silly to, you know, bet against it, because people are just obviously very bearish on the dollar and still jumping into inflation. But the amount of damage this is likely to cause if we start getting this move up, and we've already got funds covering dollar positions at the moment, so that's just going to start causing serious troubles. If they're just having to go even further out, at some point they're going to have to start unwinding positions and start selling things, which is going to put a lot of downward pressure on stocks and on gold. And when you consider that, you know, the position of the Nasdaq's already not looking particularly brilliant, so that could, it suggests that we're probably more likely, in at least over the next couple of weeks, that's going to carry on going. It's not to say we're not going to see some sort of an attempt to go higher. It's just perhaps suggests that this time it isn't going to hold the same. And the same here with the S&P. It's not really got the volume like that it had. And if we go into gold as well, so gold, we're starting to get this bounce, which is reasonable. And I watched one of Stephen Van Meter's videos before, and this is quite a strong zone for gold. He was doing the volume overlay. This is a really strong area here. But once you actually get under here, there's nothing, no volume at all. And in fact, if you go back and have a look at this, you can kind of see you've got this area here was a lot of consolidation, but then below it there's not really an awful lot. It was rally up, straight back down again, straight back up. These great big moves that you're getting. I mean, that was March 2020 obviously, but that's kind of part of the point. Is that, you know, the volume, people sold out here, everyone got stopped out, sold out, whatever, bought back in at the bottom, so there wasn't an awful lot of buyers on the way up, if you will. So this is why you've not got that volume. So what you're probably going to find is if we can break under here, everybody who was here in this position pre-March 2020 has either been stopped out and rebought at the bottom. So we're probably going to quickly see stop losses triggered and a move further down here with gold if the dollar starts going up. And again, that's just not going to look particularly brilliant. I honestly really would not be surprised to see gold sell off and come back down to this kind of zone again in the first instance, which is what, 1465, 1460, and potentially even lower. But let's have a look at intraday and see what it's telling us, because at the moment this megaphone pattern that I put in the other week seems to be holding its well, you know, doing a good job. So if you're bullish, the moving average, the 50 period moving average of the 4 hours started to come up, so that's obviously looking good. It's the first time it's actually done that. It's kind of flat here. It's actually pointing upwards, so you know that's potentially looking good. But we still need to see a break of this line. At the moment, you can see we tested it last week, and it's quite a big red candle coming in on the 4 hourly. And again, there's a little volume, and it's pretty reasonable to say we're probably going to hold this zone because we've now got this crossover on the moving averages. But yeah, what we're going to be looking at now is probably just riding along this trend line, and you know, peaking for a way out and above. Are we going to see that move above? I wouldn't bet against it, to be fair. I think we're going to see it. I just don't think it's going to carry on. I think it'll fail. And then the big one now is just going to be if we do go down. Yeah, once we get underneath here, there's no volume. But again, if the megaphone pattern holds as well, if we fail here, we'll get down to here. That's straight away telling us that the next leg is down. Pretty sharp sell off somewhere down to 1570 on gold. So it's possible, but we do seem to have a little bit of support at the moment. You can got this bit of a trend here. You know, we can try and hold that. That might turn into something. Perhaps it's a bit of a channel, but it's sort of rising on lower volume as well, which isn't brilliant. You know, you got these strong move here, strong sell-off, strongish move, slightly less strong move, slightly less of a sell-off as well. Actually, the volume's kind of disappearing. The moves are disappearing, but like I say, Sunday night, still early days. There's a lot that could go ahead. Bonds, you know, potentially putting in the bottom here. You can see this was the close last week. That was really strong. We had a good number of hours where that went up, and bonds have had one hell of a sell-off as well. If we go into the weekly and just zoom back a bit, you can see we like our long-term trend lines, and this is the weekly chart, and you can see, in fact, if I just really zoom out on this trend line is pretty solid, and this is a good indicator. I mean, we hit it here, huge sell up, hit it here, spend a bit of the time at this zone, big move up, hit it here, tempted for me, but we didn't actually get it this time because you can see here resistance. We found the resistance here and we sold off. This was in 2017, 2018. Came back under, found support slightly lower, came back, we just blasted through it again, came back through, tested it, boom. So this kind of zone is a pretty critical area. So now we're getting to the point where, well, potentially, you could argue we could go down to this level, 125. I don't think we'll get quite that low. More likely to be around here, 130, which we actually did touch last week. Intra-week. This is going to be your support now. So you've got this big wedge, we broke out of the wedge. What we're looking now on a grander scale is sort of a move up, back test of this level and a move up. And you've got this trend line of support as well. So this is going to be quite a strong level. You've also got the 200 week moving average as well, which is pretty good for bonds. And that's not to say that it's definitely going to happen, but at the moment, that I would imply that this is a good area to be buying bonds. I mean, even if you just go by basic investing technique and have a simple 60-40 portfolio, you're going to have to buy bonds and hold some sort of bonds and have some sort of a coverage, because you're just being an absolute idiot to go all in on stocks. You need to have at least some bond coverage. So if you're going to buy, this long-term trend, you're pretty indicative of a good zone, really. And when you know that the Fed are just buying as many bonds as possible, and they're committed to lowering interest rates, the term "don't fight the Fed" comes in, because the Fed are literally buying the long end. They're not buying stocks; they're buying the long end, which is here, the 30-year, or 20+ year. So potentially, yeah, could be bottom. I'm not to say it is, but it certainly is starting to look that way. What we're doing here, bit of a. So we came down, we tested this line, we slammed down, but then we rallied straight back up, came back down. Potentially this could turn into a false break. We're going to have to see what happens in tonight when the market opens. It'd be really lovely to see this just start going back up, and then once this goes, it's just going to be a fucking rocket ship. I think we'll get not 200. I really don't see that being possible. We've got a lot of resistance up here, but you know, again, it's completely possible that we end up going this high. Anything else worth looking at? I don't think so. Tesla, what's Tesla doing? Tesla's a good indicative. Yeah, so Tesla isn't looking, sorry Kathy, but Tesla isn't looking good. It was looking good. Last week I was kind of shitting myself a little bit last week because Tesla was up here and it was starting to look really bullish. Like we were coming back, we'd had this pullback and it was forming a bit of a flag ready to take this move up. And clearly it's not, it's just sold off and it's now back under its 100-day moving average again. Obviously it doesn't want to just crash, not say it won't, it doesn't want to. Everybody wants to buy Tesla, nobody wants to sell. But nobody wants to buy either anymore. It's pretty crucial. And what you've seen now is that 50-day moving average is clearly rolling over. And at some point, you know, if this keeps on going, that 50 days is going to come right back down here and cross over. And then we're going to see things fall. So that, to me, is a pretty good indication that, you know, the top's in on Tesla. Because we've never seen anything like that. You know, all the way back here, it's just up, 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 up. Up. I mean, you kind of got a bit of a... just started to roll over here, but that's a solid consolidation zone. You've got, you know, these rising higher lows the entire time. That's not what you've got here. You've got this peak, slightly lower peak, rapid sell-off, straight down to here, and then attempt to go higher, which just hasn't really gone anywhere. As soon as it's hit, you know, resistance around this zone, it's just failed. So, I don't know. From a technical perspective now, if you are going to remain bullish, you're going to be looking at it to just probably form a bit of a triangle again here and make another attempt. But up here is going to be your critical level. If this makes this attempt and doesn't get above that, that's your confirmation. Game over for Tesla. And the buyers have walked away taking profits. So that's certainly looking interesting. And it's always a good indication. Remember, things don't just all end at once. You know, one thing goes and then something else goes a bit later. And, you know, it could be that Tesla's the first to go and that's kind of brought down the, you know, the NASDAQ, QQQ. And that everything else will follow at a slightly later date. In fact, I'll have a quick look at crude as well. It's probably not got too much, but we'll have a look at it. So we had this big sell-off in crude. Everyone's been, you know, major bullish. Oh, look at oil, inflation, ooh, amazing. You know, come back down. And arguably, you know, it's just a test of the 50-day. It's nothing too significant. But if we go and have a look on the weekly, you can see. God, this mouse isn't liking me today, is it? Yeah, you can see this big wedge here. Then this has been in place for what, 2008, so since the top of the GFC. This has been in place, and at the moment we're struggling to. Well, we've not got above it. We barely broke above it for a week, and we've straight back down again. So those that are on inflation narrative, this isn't what you want to see. And it goes back to one of my previous video on inflation versus deflation. You know, this is not what inflation looks like. This, you know, that move. Oh, oil prices are looking inflationary. Oil prices are not looking inflationary. Back at $60, it was $100 and odd back in what, 150 here back in 2008, and it spent quite a lot of time over 100 here, or certainly around the 100 zone. You know, and it's barely getting above 60. It's not even hit the resistance level up here. You know. So that is not looking bullish in terms of inflation for oil. And bearing in mind as well, when you've got OPEC and Saudi Arabia and everyone messing around with oil consumption, supply, and dropping bombs on each other to try and manipulate the market. There's so much manipulation in this oil market going on, and that's the best that they can do. You know, that to me shows the state of the economy. You know, despite all these cutbacks and cutback after cutback and drawdown and all, you know, all these different things that are going. I mean, I'm not professing to be an oil expert, just throwing that out there. But despite all of that going on, this is the best we've got. It shows the state of the economy. People obviously aren't consuming that much oil. That all this cutback in oil production is still not really driving demand higher. But again, what does that say to the strength of the dollar, the petrodollar system? It shows that the dollar's strong, basically. Because the commodity is cheap, then the currency that it's priced in must be strong. If the commodity is expensive, then the commodity it's priced in must be weak. Obviously factoring in supply and demand, but when you know that obviously demand's lower, but arguably supply has been, by this point anyway, has been lowered even further to try and make up for that. Because let's be honest with you, if you're a country that sells oil, you don't want to sell cheap oil. You want oil to be up here. You'll do anything you can to push oil up here because you make more money. Who wants to sell oil at $60 a barrel when you can sell it for 150 up here? You'd be stupid not to. So yeah, I think this is a key one to watch, but at the moment I think we're probably going to end up down here.